Let's quickly talk about Form W4R. So we are speaking about a withholding certificate. So here's the approach I want you to really pay attention to. So I want you to look right now on the screen. So the official name of a Form W4R is Withholding Certificate for Non-Periodic Payments and Eligible Rollover Distributions. Okay. So what you want to do here is that you want to put on line 1A, you want to put your first name, last name, and your social security number on line 1B. As you can see on the screen here, and you put the address and you put your city and state and zip code. I mean, this is pretty straightforward. And what you want to do here is you want to go on line 2. So basically you want to specify the percentage that you want to have here. And in our hypothetical case, we have 20%. And once you actually have that, you have to just sign and date. So this is pretty straightforward. Okay, so nothing complicated. Now the form might look a little simple, but it's more convoluted than that. Let's first talk about the overview. So Form W4R is actually a document that the IRS uses to actually that allows recipients of non-periodic payments and eligible rollover distributions to specify the amount of federal income tax they want to have withheld from these distributions. In our case, we chose 20%. Okay, and so non-periodic payments refer to one-time or occasional distributions from sources such as retirement plans or annuities. So when you really think about it, the primary purpose of a Form W4R is actually to provide individuals with more flexibility. We're speaking here about greater control over the tax withholding. And so by filling out actually this form, taxpayers can ensure that an appropriate amount of federal income tax is actually withheld from their non-periodic payments, helping them actually avoid any underpayment issues when they file their tax returns, really, when you think about it. So one thing I want to say here is that you need to understand one thing, though, that Form W4R is actually distinct from Form W4, which is commonly used by employees to adjust withholding from their regular paychecks. So Form W4R specifically addresses the withholding requirements for non-periodic payments and also eligible rollover distributions. So depending on specific cases. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. So let's talk about timing here. So when do we actually when do we have to file this form? It really depends. But one thing I want to say here is that based on our research, Form W4R is typically required when a taxpayer receives a non-periodic payments or an eligible rollover distribution. And so you have some common scenarios that really are applicable to this specific case, if you will. So when you have retirement plan distributions, for instance, this is one scenario. You have annuity payments. You have individual retirement accounts distributions. So those are IRA distributions. And you also have other non-periodic payments. Let me just break it down for you. So let's talk about retirement plan distributions. So when you actually receive distributions from your retirement plans, such as a 401k plan, you may need to complete Form W4R, depending on the circumstances. And because this form actually helps determine the appropriate amount of federal income tax to be withheld from the distribution. So this is kind of cool. You also have annuity payments. So if you receive, let's say you receive annuity payments, whether from a private annuity or an employer-sponsored pension plan, you may need to submit Form W4R to indicate the desired amount of federal income tax withholding. The bottom line here is you do not want to be actually penalized by, you don't want to be penalized with a hefty tax bill at the end of the year. You also have IRA distributions. So when you take distributions from your traditional IRA, you may be required to complete Form W4R to specify the federal income tax withholding amount. And also there are other non-periodic payments. So it really depends. I mean, if those payments don't fall into the retirement plan or annuity categories. So examples include distributions from non-qualified deferred compensation plans or distributions from life insurance contracts. So it's one of those things where you have to see what really works for you. But long story short, it's always important to consult the specific instructions provided by the IRS, or even better, you want to seek professional advice to determine whether Form W4R is required in your particular situation because we can't really cover all scenarios here. Boss, I want to quickly remind you of today's topic. We are having a conversation about the Form W4R. Now let's talk about completing this form here. So when we talk about Form W4R, you have a pretty straightforward form. And one thing I want to say here is that you always want to start with your personal information. You want to be as granular as possible. So we are speaking about the basics here: the full name, first name, last name. We're speaking about your social security number and your address also, and the filing status as well, because it's one of those things where filing status will impact your withholding amount. So we are speaking about, you have to choose single, married, filer jointly, head of household, etc. And so your filing status determines the applicable tax rates and standard deduction amounts. And you also have to specify whether you want to have whether you are multiple jobs or employee spouse. If you have multiple jobs or your spouse works, refer to the two earners multiple jobs worksheet provided with Form W4 instructions, and this will help you actually adjust your withholding accurately. Okay. And so this steps actually accounts for a potential under withholding due to multiple income sources. This is kind of cool. You also have claiming dependents. So this is another step that's really good in terms of making sure you do not overpay when it comes to taxes. So let's say if you have dependents and you are eligible to claim them for tax purposes, you want to indicate the total number of allowances you are claiming, and each allowance reduces the amount of federal income tax withheld. So this is kind of cool. You also have additional withholding. So if you anticipate owing more taxes, then that will be withheld based on your filing status and allowances. You can specify an additional amount to be withheld from each payment. So this is kind of cool. And again, it's all about making sure come year end, you are able to, you don't have a huge tax bill. So in other words, you are able to avoid underpayment penalties, and also ensuring that you have closer adherence to your estimated tax liability. And one thing I want to say is that do not forget to sign and date the form. So after you complete all sections, sign and date the form. And because unsigned or undated forms may be considered invalid, there are some cases where the IRS has been really pretty strict in terms of rejecting forms that are not dated. Let me talk to you about the telephonic submissions of Form W4R. And so basically, it's really important to really see what really works for you, okay? And one thing I want to say here is that it's one of those things where the IRS has been a little bit inflexible. There are cases where they accept telephonic submissions, and there are cases where they do not, okay? And so you have to see what really works for your situation here. And one thing I want to say is that it's one of those things where you had to call first, always call first to see what's really available and possible in your case. I want to show you also on the screen here, Form W2 for marginal tax, the marginal rate tables. And those forms are really, those rate tables are kind of important because it tells you what kind of brackets you can find yourself in based on your filing status, whether you are single or married filing separately, whether you are married filing jointly or qualifying surviving spouse, or you are head of household. In either case, you are actually everything depends upon your the tax situation. And one thing I want to say here is that you need to really understand that you have to really always inquire with the IRS, regardless of your situation. It's always better. Especially during tax season, the IRS is pretty straightforward, and they will actually answer all questions. So it's always better to ask the agency what's really about your specific situation. One thing I want to say here is that when we talk about this marginal tax rate, everything depends upon your situation, but also it depends on your states, because some states actually have laws that are really aligned with the IRS's, with the Internal Revenue Code, and there are states that have different tax laws. So everything depends upon your situation. One thing I want to say though is that it's important to really understand that the bottom line is that you, in the spirit of transparency, you want to make sure that you have all the paperwork to back up any claim that you're taking, or any claim you are making, if you will, on Form W4R. That way, if something were to happen and you were to be audited, you have all the answers ready. By the way, boss, I want to quickly remind you of today's topic. We are having a conversation about Form W4R. Let me talk to you about some important considerations and tips here. And so when dealing with the Form W4R, there are a couple of factors you need to really pay attention to. First of all, changes in personal circumstances. So what happens here is that your personal circumstances will really affect your withholding rate, right? So whether you choose a 20% or 25% or 30% or even 15%, everything has to relate to your personal circumstances, which in a return will affect your financial situation. So you want to review your withholding status annually, or whenever there are significant changes in your personal or financial circumstances. And so life events such as marriage, divorce, birth, or adoption of a child may necessitate adjustments to your withholding. And again, it depends on your situation. But the bottom line here is that you have to see what really works for you. One thing I want to say is that if you have any question regarding that, because we can't really cover all the multiple scenarios here, but if you have any question, please let us know in the comment section. We'll certainly answer you. When you actually ask questions, please, you want to specify the city and state where you are actually commenting from and your specific situation. Or even better, what you want to do is you can even send us an email. And so if you do not want to divulge your personal data, you can send us an email. And our email is in the channel's about section. So we have the emails there, and you can just reach out to us and we'll certainly get back to you. Or you can also consult a tax professional. So if you are unsure about how to complete Form W4 or the appropriate withholding amounts, consider consulting a tax professional, and he or she can actually provide personalized guidance based on your specific situation and help ensure accurate compliance with the tax laws. And so it's one of the good thing is that you can actually these days you can hire a tax professional online, and you don't have to have somebody who lives in the same area as you. You can just have you can go online and just tap tax professionals near me, and you'll have a list of tax professionals. Or you can just reach out to one of those tax preparation software tools such as TurboTax or H&R Block, and they also have a service where they connect you to a real person. Okay, and so one thing I want to say is that tax professionals, we're talking about CPAs, tax attorneys, enrolled agents, and so on and so forth. One thing I also want to talk about when we talk about Form W4R is to actually look at the state aspect of things. Okay, of course, basically Form W4R is a federal form, but the state portion of things is really important also. And one thing I want to say here is that some states may require separate withholding forms for state income taxes. So the bottom line is you want to contact your state's tax department or revenue department to see what the conditions are in your state. And also when you contact them, please you want to really pay attention to two additional things: the deadline for filing those state forms if applicable, and also the kind of paperwork that is required if you have to back up things, if you have to substantiate some claims, what kind of paperwork you need to have to actually convince state tax authorities that you are actually in the right mindset, if you will. And but bottom line here is that you want to regularly review withholding amounts. Okay, it's one of those things where I was just telling you a little earlier that when you have changes in personal circumstances, you might want to change things also, but you have to see really what really happens, because you want to make sure that those withholding amounts align with your tax obligations, because the last thing you want here is to have over or under withholding, because this can really can result in unexpected tax liabilities or unnecessarily large refunds. So adjust your withholding as needed to achieve a balanced outcome. That's what we call here tax optimization. So you have fiscal optimization. So you are able to actually balance things out along the way. And one thing I want to say here is that you have to really also understand that tax laws are changing all the time, so you have to adapt to those laws and make sure that whatever you are putting in the system in terms of tax laws are pretty straightforward. And please don't forget that we are talking about compliance not only at the federal level, but also at the state level, but also at the city level, and in some cases at the county level. County level is also an important element to keep in mind. And the bottom line here is that you want to do things electronically if possible, or just do it manually if you have no other choices. Before I close to this conversation, I want to talk about the fact that when we talk about Form W4R, we are essentially making sure that you do not actually overpay or underpay your tax liabilities. That's all. But when you overpay, you are getting unnecessarily large refunds. When you underpay, you are getting unnecessarily hefty fines. So you need to really find a way that works for you. And the bottom line here is that it's all about the eligible rollover distributions, right? It has to be non-periodic payments and also eligible rollover distributions. So by actually accurately completing the form, you can avoid underpayment issues and ensure that the appropriate amount of tax is withheld from your distributions. And one thing I also want to say here is that you want to really make sure that if there is a possibility for you to file this form electronically, just do it. I mean, filing the form manually is fine. There's no problem. I don't have any problem with that. But if there is a possibility, the slight possibility of filing this form electronically, it's just always better to file the form electronically. And so one thing I also want to say here is that when you actually file the form, you want to consider your personal circumstances, whether you're married or single, whether you have a child or you have a death in the family. Like if there are changes in personal circumstances, make sure that those changes are reflected in the amount of withholding that you actually have from your taxes. And also, you have to think about if you're traveling internationally, then you have to really see how Form W4R actually affects your status. In other words, if you're working for a U.S. company, or let's say for a foreign company, but you're really traveling internationally, then you have to really understand that there are also some implications. I wouldn't say consequences here, but there will be implications, and you have to be aware of those implications. And one of which is you might actually end up paying more taxes if you are in a state that has in a country, if you will, that has a higher preferential rate than the U.S. But bottom line here is that if you are able to optimize your taxes properly, you will know what kind of tax liabilities you need to really you need to think about, whether you are at 20%, 25%, 30%, 40%, or what have you. You have the ability to actually plan those things beforehand so that you're not surprised at the very last minute. Thank you so much for your attention. I really appreciate it. Let's quickly do a recap here. So I was just talking to you about Form W4R. So I gave you the approach, and now I'm talking about the recap. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.